Okay, so crypto is falling for the same reason. The Dow futures dropped more than 450 points after Trump hits U.S. trading partners with tariffs. Trump says Canada, Mexico, and China tariffs will all be worth it, but may cause some pain. So that's a new development. He's willing for there to be some short-term pain. And so why is the market panicking? Because new Trump tariffs stoke inflation fears, trigger $2 billion in crypto liquidations. Bitcoin crashes to 92K. Now, what does this mean for the primary driver of crypto prices? Global money supply in white. In orange, we see the price of Bitcoin. In white, we see the global money supply. They are perfectly correlated. Whenever the global money supply dips, we see a massive crash in Bitcoin. And whenever it trends up, we get a massive rally. So with all this tariff talk, what are governments going to do with global money supply? Well, Canada is planning a COVID-style stimulus if U.S. enacts tariffs in bid to avoid early election. What is COVID-style relief? It is massive money printing. What happens when we get massive money printing? This white line skyrockets. What happens to Bitcoin is it goes up, like it has every single other time. So Canada's talking about printing a massive amount of money, causing that global money supply in white to go up. What's going on in the US? Remember, interest rates are insanely high. It is impossible to get a mortgage right now, practically. The real estate industry is suffering. Anyone trying to get a loan is suffering because the cost of capital is too high. This is hurting early stage growth industries like the blockchain industry, and obviously real estate and many other industries. So what is going on in the United States? Long bond yields are coming down materially on the back of tariffs. Long bond yields are interest rates. So the dollar is strengthening and interest rates are finally starting to fall on their own. Because the US is collecting more capital, the dollar is stronger. Step one, lower yields. Step two, weak dollar. So they need interest rates to come down. They're doing whatever they can to make interest rates come down naturally and to fight inflation and strengthen the dollar so that they can ultimately weaken the dollar and debase it over time. It's kind of confusing, but that's what they want. They cannot debase the currency if interest rates are too high. So they want interest rates to fall naturally. That is exactly what they are doing. And so what does this mean for crypto prices? Are they going to go to zero on the back of all this volatility and uncertainty? Well, obviously, if the United States can ultimately lower interest rates and countries around the world are stimulating massively, then this white line goes up and crypto goes up like we just talked about. And so what are we seeing crypto prices do right now? We're seeing them plummet. What happens when the world panic sells these assets while the fundamentals are getting stronger and while massive money printing and stimulus is on its way? We've seen how this plays out. This is what happened to Bitcoin. The last time people panic sold it in a similar situation, we hit a low of like 3K, and then we ended up the year after a halving, 2021. We ended up hitting $69,000 from $3,000. Chainlink is making the exact same pattern, and most high quality assets are making the exact same pattern. And so fundamentals have never been stronger for the space. President Trump issues order to turbocharge crypto industry, explore national stockpile. Doesn't get bigger than this. The best fundamentals the crypto market has ever seen, heading into a situation where there's massive money printing, similar to 2021. Maybe not quite as big as 2021. That was insane money printing, but similar to other periods of major government stimulus and increased global money supply. So obviously crypto is not going down anytime soon. The fundamentals have never been stronger. This is short-term noise. This is panic selling. It has absolutely nothing to do with the fundamentals of these assets and the long-term upside.